This is why you should vote no on House Bill 3636, the bill that would overturn the Illinois Supreme Court's Cypress Creek decision. House Bill 3636 would unfairly divide the pool of money received from a foreclosure sale of property under construction. It would stop Illinois construction lending dead in its tracks, and it would alienate your business and homeowner constituents. In a 5-2 vote, the Supreme Court's Cypress Creek decision reaffirmed over 100 years of law under the Illinois Mechanics' Lien Act. This law tells our courts how to divvy up the pie of money from a foreclosure sale when there's not enough to go around to pay off all the construction loans and contractors' work and materials. This example explains how money from a foreclosure sale gets divvied up under Cypress Creek. To keep things simple, our project uses round numbers and only 5 contractors. Each of the 5 contractors provides work and material that goes into and adds value to the project. Keeping it simple, let's say that the value each adds to the project is $40, for a combined total of $200 in added value. Here, money from the owner's construction loan goes to pay invoices from 3 of the contractors. And because those contractors got paid from money funded by the construction loan, they don't record mechanics liens. And under Cypress Creek, the construction lender who funded payment to each of those contractors gets to take their places. The other 2 contractors haven't been paid yet. That could be for a host of reasons, ranging from submitting their invoice late to problems with the quality of their work. Unpaid, they each record a mechanics lien. Later, things go badly, and the project goes into foreclosure. Recognizing that foreclosure sales often yield lower prices than ordinary sales, our project sells for $100. Only half of the $200 in value that the contractors together added. And with only $100 available, there isn't enough to pay everyone the $40 they are waiting for. Under Cypress Creek, that $100 gets divided up and paid in proportion to the value each contractor added to the project. Each added $40 worth of value, but half is gone, so the amount available for each gets cut in half. Each contractor gets a proportional share of the remaining $100. That's $20 each. Each of the unpaid contractors holding a mechanics lien gets $20. And $20 is bound for each of the 3 now departed contractors. But because the construction lender used construction loan money to pay those contractors, ensuring their exit from among those awaiting payment and averting their mechanics liens, the construction lender stands in the spots those contractors vacated. So, the $20 bound for each of the departed contractors goes to the construction lender to repay a part of what's owed under the construction loan. Doing it this way is fair and reasonable. It gives everyone credit for the value they put into the project in proportion to the value that everyone else added respectively. The 2 contractors with mechanics liens for the labor and material they personally provided, and the construction lender, who paid out cash to inherit credit for the value added by the labor and materials from the 3 departed contractors. It does this in an efficient way, keeping overhead costs and paperwork to a minimum, and freeing up more money for lenders to spend on loans for labor and material on other projects in your community. But House Bill 3636 would destroy all of this. In our example under House Bill 3636, only those who hold perfected mechanics liens get paid first. So, $40 first comes out of the $100 pot and goes to each of the 2 unpaid contractors holding mechanics liens. Paid in full, they exit, leaving the construction lender to step up with only $20 remaining. That's the construction lender who earlier paid $40 to each of the 3 departed contractors and averted each of their $40 mechanics liens. These changes would unfairly favor contractors by giving them a much larger slice of the pie than the construction lenders in proportion to the value that each is responsible for putting into the project. So, if this bill were to become law, how would construction lenders respond? Construction lenders will want to return to the front row. To do that, they'll need to hold mechanics liens. To get there, before a lender would pay for construction work or building materials, they would require each contractor and supplier to record a mechanics lien and then assign it to the lender. This would happen each and every month with each and every contractor and supplier of materials, and with each of their subcontractors as well, until the entire project is finished. That way, if a project goes into foreclosure, the construction lender would stand in the spots vacated by the contractors they paid, holding a mechanics lien entitling them to equal treatment with the other contractors holding mechanics liens. But that would also create huge problems. The byproduct of this process would be more overhead, more paperwork, higher costs, and slower payments. Designers, contractors, and material suppliers would spend more time and money preparing and recording their mechanics lien claims and assigning them to lenders. The lenders would also spend more time and money auditing and keeping track of those claims and assignments. And the title companies would spend more time and money reviewing all of these claims and assignments. In addition, recorders' offices would be clogged with huge volumes of new lien claims that would be recorded every week. Contractors and material suppliers and all of their subcontractors would pass on all of their new costs, including the countless new recording fees, by raising their prices for design services, construction work, and building materials. Lenders would need to charge higher fees and interest rates on construction loans, and title insurance companies would need to charge higher premiums and fees for title insurance. This is hardly the kind of environment that our state and your district needs to encourage new construction and stimulate the economy. Navigating the ancient and complicated world of mechanics liens is hard enough today, as the Supreme Court's decision clearly illustrates. House Bill 3636 would make this job even more complicated, while reducing the usefulness of mechanics lien claims for the general public. Under House Bill 3636, each of the mechanics lien claims that would be routinely recorded and assigned to the construction lender every month would need to be released as well. That's a lot of recorded liens that would have to be released. Auditing all of those releases and ensuring that they get recorded would create many new costs for lenders and title insurance companies, which inevitably they would pass on to the project owners. As the Supreme Court noted, mechanics lien claims serve as a signal in public records that a project is in trouble. That would stop if this bill becomes law. Filed mechanics lien claims would no longer serve as a warning sign of trouble in a project if they're routinely being recorded by every contractor and material supplier every month during the project. Today, when a project is completed and the construction loan gets paid off, all it takes is the release of just one construction mortgage to clear the title of the property. But under House Bill 3636, all of those mechanics liens need to get released to clear title. But with so many, there's bound to be some strays that don't get released. That would cause major headaches for businesses and homeowners in your district when they go to sell or refinance their property, especially if the former lender is no longer around. Some contractors and material suppliers say because of Cypress Creek, they can no longer extend trade credit to their customers, and that makes business nearly impossible. But as things stand now, even under Cypress Creek, Illinois contractors and suppliers enjoy a better position than their counterparts in 45 other states. And in 41 of those states, construction lenders get entirely paid first, before anything goes to mechanics lien claimants. Iowa is one of those states. Yet Iowa contractors and suppliers still extend trade credit to their customers, and construction hasn't stopped on that side of the river. House Bill 3636 is unfair, and it's bad for businesses, bad for homeowners, and even bad for the construction industry. It's why the Supreme Court decided the way it did in Cypress Creek, and it is why the court's decision should not be overturned. You can help protect our state economy and your district by voting no on House Bill 3636. Please vote no and preserve the wisdom of the Supreme Court's decision.